Gaming is the future. Gaming is a market that is poised for long-term growth in the coming decades. The gaming market is expected to exceed $250 billion by the year 2025. Now, the industry is expected to grow at an average compounded annual growth rate of 9%. And over the last decade, it has grown at about 15% compounded annual growth rate over the last decade or so. But for me, I love gaming as a consumer. I love gaming as an investment. And for me, I love lots of video games. I have many favorite franchises like Red Dead Redemption and Minecraft and Call of Duty and Grand Theft Auto, and most of all my favorite, which I think is really undervalued, I love the Walking Dead series. I think that's really undervalued. Go check that out. But streaming is a growing industry as well, and I think that it is going to be here for the long term. I have streamed games in the past, and I absolutely love it. It's an enjoyable experience for me, the streamer, when I've done it in the past, but also as a viewer. And all of these people I love watching. It's a very enjoyable experience, and I think that it's going to be around for a long, long time. I don't think that this is going to go away anytime soon. Now, many other companies have recognized this as well. This is a trend that is not hidden. It's not some type of hidden gem. Other companies as well are recognizing this trend. Amazon has been very successful with its acquisition of Twitch. It recently acquired Twitch a few years ago, and since then it has done very, very well in that investment. Twitch has grown to a Goliath in streaming and is now the #1 player in that market. I think that Amazon is very quick to move on these type of investments, and I think that it was very intelligent that they got on Twitch when they did. Now, it's not just Twitch. There's also other competitors. Microsoft is one of the biggest competitors, or Microsoft was one of the biggest competitors in the space with Mixer. Now, it did recently pull the plug on that investment because it just couldn't compete with Amazon's Twitch, but Mixer is another one that Microsoft made an investment in. Now, this just shows that if the tech giants are investing in it, they see what I see. They see that this is going to be a long-term growth category. Streaming is going to be here to stay. Gaming is going to continue to grow. And for me personally, I'm in college at the University of Central Oklahoma. And even my school now has an esports team and its own building. And so for me personally, do I love gaming? Yes. Do I believe that it will be a much bigger market 5 and 10 years from now? Yes. So how do we take advantage of this, and what do we do with an industry that is poised for growth? Well, let's go ahead and head over to my portfolio of M1 Finance. Oh, and real quickly, before I pull up the stock, if you want to get signed up with M1 Finance, they did just extend their deadline through their little announcements right here. You can get $30 for getting signed up. All you got to do is just sign up. Use my referral link down below in the description. You'll get $30, and there's lots of other links down there as well, so go ahead and check that out if you're interested. But let's go ahead and click the research tab. And let's go over here and type in CRSR. The stock that will take advantage of this market, in my opinion, is Corsair Gaming. And I'm going to go over in the video all the reasons why I think that this company is one that is severely undervalued. I've talked to you guys in the past that I've considered making a growth portfolio, and if I had that portfolio open today, I would be buying this stock. And I'm going to go over all the reasons why I'll be considering investing in this company over the next couple of months. So this is Corsair Gaming stock, and its ticker symbol is CRSR. It currently has a market cap of about $3 billion. And this is a very new stock to the stock market. You can see that its chart only goes back to September of 2020. Now, if you're watching this in April of 2021, that's when I'm shooting this video, that is about 6 months from the time that it went public. But if you're watching this in the future, well, hello, and tell me if I was right about this stock. If I was right, tell me in the comments how awesome and smart I was and that this was a great investment. And if I'm wrong, go ahead and roast me in the comments. So I'm open to comments there. So go ahead and just write whatever you want down there. But CRSR is currently at $34 a share, which is double its initial public offering of 17. Now this marker right here at the beginning shows 14, but it actually went public at 17. That's what they initially announced their stock at. And today it is almost exactly double that price of $34 a share. Now you might see that and you might think, okay, this doesn't offer any value, but that's not right whatsoever. This company, even at $34 a share, still has a lot of value. If we go over and look at this stock chart, you can see that at one point it was actually being valued upwards of $50 a share. At the highest close it ever had back in November of 2020, it actually closed at $51. So even if it were to ever get back to those all-time highs and never get any higher, that is still about a 50% upwards move from today's price of $34 a share, getting back to its new all-time highs. Now, right now it currently has a PE ratio that is under 20, and I want to tell you in this video why I think that is very, very low, and this company is not getting the respect that it deserves. So why do I think that this company will get back to $50 a share and even higher in the coming years? Well, let's go over that and I'll give you all my reasons why. Now to start off, let's go ahead and head over to the investor relations page. This is the investor relations page for Corsair Gaming for CRSR stock. And I want to say that I really like this page. A lot of investor relations page are not very user friendly. They're not very cosmetically appealing, but this one is very easy to navigate and there's a lot of cool features on this. So if you want to invest in the stock or if you just want to check out the company, I would recommend definitely go ahead and check that out. But if you see at the top here, it says why invest? And if we click this tab and we click why invest and we scroll down here and we go to these top 7 bullet points, we'll just give you a quick overview of these top 7 and why I think they're a good overview of the company. Number 1, we have 1.7 billion in net revenue. Okay, that's a lot of revenue for a company of this size. That's only 3 billion. They're in 75 different countries. They support 75 countries and that number is increasing. That is expected to go higher. I'm sure it will be in the triple digits very, very soon. They have sold almost 200 million products already. And of the peripheral market share, they currently hold about 18% of the market. Now, those of you that don't know, the peripherals is things like keyboards and streaming decks and mouses for the streaming products that this company sells, if you didn't know that. So they currently own about 18% of that market. There is room to grow there, but still not bad. For the PC component market share, this is the big one because they own about 42% of that market already, and this is massive, but is expected to grow as well. The estimated market size is expected to be over $36 billion, and they're already the #1 market share position in 2020 out of all the different players in this market. But let's go ahead and go to their regular Corsair Gaming page, not the investor relations, but just their normal page. But let's go over some of the products that this company sells, because before we get into the valuation and why I think this company is a buy, I need to give you the reasons why I think that this company is poised for growth, because we need to just tell you what the company sells, right, to start off with. So let's go ahead and start off with the different tabs. Let's go ahead and start with gaming gear. First of all, they sell RPG keyboards, a lot of the cool light-up keyboards that you see a lot of people in video games own. They sell those. They sell headsets. They sell mouses, however you want to pronounce it, mouse pads, gaming chairs. They have different apparel, different clothing products that people can buy to represent their favorite gaming brands and gaming products. They have multiple accessories that go along with their products, and they have ambient lighting. And their streaming gear, which is I think is the big one with their Elgato brand. I think that this one is really underappreciated. They have Elgato game capture. They have Elgato Stream Deck, audio equipment, they have lighting equipment, green screens, multi-mount equipment for their streaming gear, and then in their PC, because this is the big money maker right now. If we go to their PC components, this is one of their biggest money makers. You see that a lot of these products are very high-end products, a very high margin business, and the prices that they can charge for these products is honestly, it's kind of ridiculous. They have computer cases, CPU coolers, fans, memory products, power supply units, custom cooling, storage, accessories, and then they also have their gaming PCs as well. This will highlight some of their products that are just full-blown PCs already built where you can buy all in one, including their Origin brand and their Corsair brand, some other ones like that. And then they also have software. Now, software I want to mention really quickly is that right now, this does not produce a lot of revenue. This does not produce a lot of profit. But long term, this is kind of a wild card for the company. I think that software is definitely a high margin, high growth business for really any company. Software is obviously the hot market in the stock market right now. But if this company were to start selling software in a big way, this could really take this company to the next level. Now, I'm not saying that's going to happen. I would say invest in this company for the hardware, but the software is definitely a wild card, definitely a good long-term opportunity as this company grows, has positive cash flows, and it reinvests back into its business, which this company is reinvesting back into its business heavily right now. Now, if we go to the investor relations page, I want to show a picture real quick. And this represents the type of products that they own and the giant ecosystem of streaming and gaming products that they have. Now, when I show you that giant list of products, it's probably hard to imagine what products could actually be used or just really anybody need all of those products. Well, this is to give you an example of their ecosystem of products and how they could fit into your gaming setup, or more importantly, how they could fit into someone else's gaming setup, because this is an investment opportunity. This is not something that I'm trying to sell you on. I'm trying to give you my reasons why I think this could be an investment opportunity. People are not just buying one or two products. People are looking to buy an ecosystem of products based off of the brand that they want to go with. And Corsair is one of the largest brands, as well as a lot of their subsidiaries as well. Now, if you look at the top, it will show some of their brand names. And like I said, they have some incredible brands in their portfolio. But one of the main ones that they have is Corsair, Elgato, Origin, and Scuf. Scuf is kind of a smaller revenue business, but is still another wild card, much like their software business. Now, I want to show you another picture. I want to show you one more real quick, another one. And this one is titled Our Market Leadership. And this shows how dominant they are in the streaming and gaming space. In keyboards, they are second place. And look at some of the names on here real quick. You see some of the largest names in gaming: Logitech, Razer, Microsoft. Some of the companies on this list are some of the biggest gaming companies in the world. And Corsair is very high on the list on nearly every single one of these. Their keyboards are ranked second among all these companies. Their mice are third. Their headsets are fourth. That's the lowest one on the list, is the fourth in the market share. Streaming peripherals, second. Performance controllers, second. That's like the SCUF gaming like we were talking about. Memory cards, they're first place. In cases and PC cases, they're second. In power supply units, they're first. In cooling solutions, they are first. So you see, in most of these, they're number one or number two in every single one of these products for these market. And so this just once again shows the dominance that this company has in this space and why I think they're clicking on all cylinders and why I think this company is undervalued. Now what I want to do is I want to go to their annual report here, the one that they just released last year, and I want to go over their growth strategy because I want to show you how this company is planning on growing in the future. And it's highlighted into a couple of bullet points. Advance as the global market leader in high performance gaming and streaming gear. Continue to develop innovative market leading gaming and streaming gear. Expand into new gear, this is a big one, expand into new gear and services that grow our market opportunity. Leverage our software platforms to sell more gear to existing customers. Strengthen relationships with end users by increasing direct-to-consumer sales. Those last three that I just mentioned, expanding into new products and services, is going to be a big one because they're constantly reinvesting into new products. They're going to leverage their software. Remember how I said that the software is a kind of a wild card, kind of a big opportunity that could work out in the future? Well, they're planning on leveraging their software. And then last but not least, they have direct-to-consumer sales. The way that we are moving with sales, direct-to-consumer is usually the way to go, and Corsair recognizes that. And so that's how they're planning on selling more of their products in the future. And then they have three final ones as well. They have continue to grow market share globally. They are focused on a global scale. They're not just focused on the United States. That's obviously the big market, but there's other places as well, like in Korea and China, that has lots of growth opportunities for this company. Leverage their brand, software integration, and superior product quality to support a pricing premium in the gaming PC components category, and selectively pursue complementary acquisitions. And I think those last two are another big ones as well. Their brand is why people are going to buy their products. Once they build a brand, once they have a strong brand recognition, it's much like owning like something, say, for like a Caterpillar. One of the main reasons why the company Caterpillar is successful is not because of their machinery products, not that they're not good, but it's mostly because of the brand name. There are many companies and many governments and things like that that use Caterpillar products just because of the brand name. They know it, they recognize it, it's a trusted company, it's one of the largest industrial companies on earth, and that is why it has been so successful. The same thing for this streaming company. Once they get that dominant market share, they continue to hold that dominant market share, they'll be recognized as the industry leaders. And I think as a lot of people go to buy gaming PCs and streaming equipment, I think that Corsair and Elgato and Origin will kind of just be the default. They won't even really consider anything else. And now what I want to go over the income statement and the balance sheet. The income statement has been very nice. Once again, this is a newer company, so data only goes back so far. But net revenues, $900 million, $1.1 billion, $1.7 billion in 2020, steadily growing revenues. And more importantly, their profitability, because it doesn't matter if we're talking about dividend stocks or growth stocks, profitability is very important. This went from a net loss of 18 cents, a very small loss, and then in 2019 they had another smaller loss of 11 cents, and then in 2020 they finally produced a positive net income number of $1.20, a massive move upwards there. So this is a company that is growing revenues and more importantly growing profits in a massive way. Okay, so this is their balance sheet as well, because I tell you that I like to invest in companies that have healthy balance sheets. I don't want to invest in a company that is just drowning in debt and is constantly weighed down by its long-term debt so they don't have opportunities to grow. But they have $130 million in cash right here, this number that I'm highlighting, and their long-term debt is $300 million. So not out of hand whatsoever. That is not very big, especially for a company that is growing quite nicely like this and profitability is really starting to come in. I don't think that this company will really have to focus all that much on raising cash if they don't want to. I think that they are cash flow positive now, and they'll be able to maintain themselves, and I think that that balance sheet is just fine. So that's not something that I'm uncomfortable owning one bit whatsoever. But now let's go back to M1 Finance, and I want to showcase this company, and I want to look at the price. Because if you look at this price, like I said, it went IPO at 17, it spiked up all the way to $50 plus, and now it's currently trading at 34. And so you might be looking at the price, like I said earlier, it went IPO at 17, and it's currently trading at 34. And you're saying that's double the share price that it initially went public at. Isn't that a ripoff? I don't think so, and I'm going to tell you why. This company is having some short-term price movement that is negative, which has nothing to do with the fundamentals of the business. The reason why this company has finally started to trickle down ever since February and March is that the lockup period finally ended. Now, what a lockup period is, if you don't know, is that usually it's usually 6 months. The time varies, but usually 6 months after a company goes public. And so 6 months after this date, on September 23rd, the insiders could finally sell their shares. So insiders that own the company since before the company went public were not able to sell their shares for 6 months. Now, the reason why they might sell off, maybe they're wanting to diversify wealth, maybe they just want to take their profits, because if they were investing in this early on, if they were private owners, they have massive gains. That pretty much goes with all IPO owners. So that is why this is downtrended. People have been worried about the lockup, and insiders have sold a little bit ever since March 23rd when this expired, which was right at this date, but pretty much it stayed flat. And so the reason why I think this is another buying opportunity is I want to go over to M1 Finance real quick. So we're over here at M1 Finance, and like I said, this company is currently trading at $34 a share. And I want to look at the numbers, which I'll be highlighting, which is the earnings per share expected for this year and the earnings per share expected for next year. Now remember, the earnings per share that was in 2020 was $1.20, but it's expected this year to be $1.55. So even throughout the pandemic, people being forced to stay at home, this company is still growing. It's not a one-trick pony. It wasn't just a 2020 exception. This is in 2021 as well. They're growing their earnings per share number. Same thing in 2022. It's increasing to $1.81. Now, if we look down here and we go to the revenue estimates, they currently do $1.9 billion in revenue is what they're expected to do in 2021, but they are expected to grow to $2.04 billion in 2022. So that represents an 11.9% growth rate and a 7.2% growth rate in 2021 and 2022. I think that they're probably underappreciating that number. I think it will probably grow a little bit faster, but even at those numbers, that is not bad whatsoever. And so what we're going to do is we're going to take those numbers and figure out what this company is currently worth. Let's look at the price to sales and forward PE ratio. But the forward PE ratio is the one that's most important. Let's take the share price, which is currently about 34 bucks, and let's divide that by the earnings per share expected next year, the forward price to earnings ratio. So you take 34 and you divide that by 1.81, and you see that this number is under 20. This is very undervalued in my opinion. And for me, anything that is under 20 for a forward PE basis, which by the way, a 20 for this would be about a 36. So pretty much for me, anything that's under $36 a share is pretty attractive in my opinion. And especially once it starts to go down to 35, 34, if it were to go to 33 or 32, I think that it gets more and more attractive the lower that it goes. And once again, this isn't a huge deal, but price to sales ratio, it currently has a market cap of $3 billion, but next year it's expected to do revenue of $2 billion. So this company's revenue is 2/3 the size of its market cap. And that is a company that is in a growing industry and growing revenue. And I think that those numbers are really undervalued in my opinion. So once again, to reiterate, this is a growing company. Gaming. I love the industry. A lot of people love it, especially a lot of males. Pretty much all the people that watch my videos are male. It's a growing company. It is in a growing industry, which is esports, e-gaming, streaming, things like that. Has a dominant market share for the products that it sells. I showed you that it is very dominant for the products that it sells. It's usually either number 1 or number 2 for every product that it sells. It has great recognizable brands, especially Corsair and Elgato are my favorite. Those are two that I've known long before I even knew this company was public, and I like those two brands, and I think those are going to be great recognizable brands that will build long-term sustainability products that will make people want to buy their products long-term. Another thing, like I said, we went over the balance sheet. They have a decent balance sheet, not anything that's amazing, but not anything that's out of control. Their long-term debt is not bad. Usually a company that is growing and is early on like this usually has a lot of debt. Theirs is not bad whatsoever. And then the short-term pain for this stock is the worries about the lockup period. So that is a short-term pain for a long-term gain. And then last but not least, the most important of all of this, they have a compelling valuation. And in my opinion, I think that this is opportunity to buy this stock long-term and hold. I think that this is a buying opportunity. Like I said, anything under 36, which would be my target to where I'd want to buy this company, I think has a lot of opportunity. But thank you guys for watching. I really appreciate it. Like I said, if you want to check out all that stuff down below, we had another one sign up this morning. M1 Finance just announced that they're bumping up that referrals to $30 again, and I think that it's going to be here to stay. So check out that in the description, as well as lots of other things as well, including Yada savings account, credit card referrals. If you want to see my pie firsthand, if you want to invest in it yourself, that's all down below in the description. But I thank you guys for watching, and I'll catch you guys next time.